Hi, I'm Liz Naumovski, host of Finance is Personal. Insurance. The word is synonymous with security and stands for protection. We use it to mitigate risk, and there are so many different types of insurance to choose from: life, health, disability, critical illness, and more. And how do you know which product is right for you? Do you know whether you have enough insurance or whether you're underinsured? And what about women in insurance, especially through different stages of our lives, or the investment property you own and might pass on to your loved one? To guide us through different insurance products and help us understand how insurance can fully assist us through our life stages, I'm joined by Sara Zollo, a financial advisor with Sun Life Financial Canada. Welcome to the show, Sara.
Thanks, Liz.
I love talking to you about insurance.
Good.
Because there are so many people out there that don't understand the product. They think it's too complicated. And it's just like regular financial planning, financial literacy. People stay away from it because they don't understand it. And when you talk to a lot of people, the first thing they say is, oh yes, I don't have life insurance, but I really need to get some. But that's not the case.
No, it's usually not the case. A lot of times when people come into my office thinking that they need life insurance, it's not necessarily what they walk out with. Life insurance is reserved, in my opinions, only for people that have dependents. So is somebody going to be worse off financially if something happens to you tomorrow, right? And so if you don't have dependents, if you're not married, common law children, you do have to ask yourself, do I necessarily need life insurance, or are my insurance premiums allocated every month to a different product, maybe a little bit better for me? A lot of people, in my opinion, overlook disability insurance, critical illness, so what we call living benefits.
And I think if you look at insurance in women, I think it's important for them to understand critical illness and disability. I don't have life insurance. I went and got critical illness because I don't have any children. I don't have a husband. I have a cat, but I can't leave, life insurance to her. So for me, critical illness was the best thing. But there are a lot of women out there that are self-employed or contract work. What would you say to them?
Well, if you're self-employed or a contract worker, which we do see, unfortunately, a lot of people are one of the two. And I don't mean unfortunately, but what I mean by that is that they don't have sort of a baseline plan of coverage with group benefits if they're contract workers or self-employed. So health and dental are probably not there. And then there's no disability coverage. So if you're an employee of a company, for the first 17 weeks that you're injured or you're sick and you can't go into work, you'd have EI insurance, right? And then if you have group benefits, long-term disability. So you still have some money coming in the door. So first things first, if someone is a nurse, they're contract workers, or if they're taking on, taking over a position, or they're self-employed, they're trying to—
someone like a makeup artist, or someone in television broadcasting or film.
It's important to first and foremost insure your income. And that's actually disability insurance. So if I was meeting that person, I would probably first say, let's allocate insurance dollars towards disability, and then second, the critical illness.
So you say insure your income, but if you're a contract worker, you're not going to make the same amount of money every year.
True. What they look at is like an average over the past 2 years. And they actually give you 20% that they round it up by, based on the fact that they know self-employed people obviously write off a lot of stuff. And if somebody's very new to a profession, if you can show them that you have so many contracts, them being the insurance company, they will actually go ahead and insure that future income. And you can build into your policy something called future income option. So as you make more money and you can show the insurance company, here's my T1, I made more last year, you can actually just increase the value of that policy.
Okay, so that's disability. Now what about critical illness?
Critical illness is honestly one of my favorites. If I could have a favorite product.
Oh my gosh, I'm so excited about this.
Yes, I'm very passionate about this because I never met my grandfather. So my father's father, he had cancer and he passed away when I was 1, so I don't have any memory of him. But there's a very real story that resonated in my family. So they had a small mortgage left to pay off when my grandfather was sick. And it wasn't until my father and my aunt went and paid off the mortgage and my grandfather passed the next day. So my grandmother believes that he was holding on because he knew that there was that financial burden that he didn't want to leave his family with.
He wanted to feel secure.
Do you know what I mean? So that's a life insurance story, that's a critical illness story, but so many people overlook critical illness when there's a 1 in 4 chance of unfortunately getting diagnosed with a critical illness. So if you had a 25% chance of something, you'd probably insure it, and that's the reality of critical illness, right? So I'm very passionate about it. Yeah.
So, okay, so we have critical illness, we have disability, life insurance is for people that have children. And what about long-term?
Long-term disability or long-term care?
Oh, both.
Long-term disability sort of falls under the disability definition, so we've already touched on that a little bit, but long-term care, that sort of 55 plus is the ideal time. So all these insurance products sort of have ideal times in your life or your life stage that you'd want to consider them, right? So life insurance and critical illness and disability, those are arguably during your working years while you're, let's say, young and healthy, that you want to get those products. And then the long-term care is something pre-retirement or moving into retirement. Long-term care essentially pays you a weekly tax-free benefit in the event that your physical and mental capacity start to deteriorate with age.
Okay.
So there's a lot of stipulations into how that's paid out, but it's very, very important.
So what are the biggest misconceptions of insurance that you've seen when clients come in to see you?
High level, I think it's cost. I read a statistic that people overestimate the cost of insurance by 300%.
Oh, wow.
So that's big. And I always play a game with my clients. You know, if I have a couple in my office and we just went through a financial plan and it came to a conclusion that they needed X amount of life insurance and X amount of critical illness, you know, I say to them, okay, so how much do you think this $1 million of term life insurance is going to cost you? And they always think it's like a couple $100 a month, and it's well below that. Like, it's not even $50 a month for like male 40 non-smoker for $1 million of life insurance, right? So I think it's cost. The other thing is, I think they think that if they can't do the full recommendation, they might as well do nothing, right? So if I met someone and I said, you know, critical illness is expensive because there's a 1 in 4 chance of claiming on it, so your probability of making a claim is relative to your premium, right? So it's one of the more expensive pieces. I think people think if I can't afford the full premium, I might as well just get nothing.
Oh.
That's a mistake, right? Because if you can't afford the recommendation, take half or take a portion of what you can afford, and some insurance is better than none.
Sara and I will be back after the break to answer more of your questions about insurance here on Finances Personal. Hi, welcome back to Finances Personal. I'm Liz Naumovski, and today we're discussing and simplifying the questions surrounding insurance. Joining me is Sara Zollo, a financial advisor with Sun Life Financial Canada. Now, Sara, before we went into the commercial break, we were talking about couples. And one of the key things is I want to know when you've got couples that come into your office, how communicative are they? Are they on the same page? Are they totally not on the same page? Do they both understand that they're there for the same reason?
I would say high level, the short answer would be no. They're not necessarily on the same page. It's very interesting. There's also like a little bit of like therapy component to you know, the financial planner position. But I think that there's always a dynamic where there's one person that's really taking the lead, and I can tell usually within about the first 20 minutes based on who's talking more and who's like coming with like the prepared documents, who's handling most of the financial decisions. That's pretty common. Like usually in a relationship, there is one individual that's sort of spearheading most of the financial decisions. They're usually not collaborative, and usually the passive individual is happy to be passive. Me as a planner, I try to get the other person engaged. I do encourage most meetings both people attend, because you need to know what, especially if we're talking about insurance, what products you have, right? You don't want somebody finding out that their husband only had X amount of life insurance when they need to make a claim, right? So you have to build that relationship, and both people need to know what products you have and come to that decision collaboratively, if possible.
Typically, a lot of couples think that, you know, because the husband's the breadwinner, he's the one that has insurance, and the woman shouldn't have any insurance.
Yep. I think that there's a big oversight, and I do agree that the level of coverage should be relative to the income. So if somebody is bringing in the majority of the income to the household or accounting for the majority of the monthly income, obviously we'd want to put larger insurance emphasis on that individual and again insure that income. But to overlook someone that's maybe not working or has a lower salary is a mistake, because if something happens, be it a premature death or an illness or a disability, typically in real life The higher income earner is going to take some time off work to help support and be with that person, or bereavement if it's a passing. So the reality that there would be some level of disturbance to the income is there. The other thing is everybody overlooks the unidentified cost of childcare, right? So if you have young children and the wife is fully at home with them and the husband's working, for example, you would still need coverage for that wife, life insurance, let's say in this case, for example, because again, if she passed on, the husband would maybe have to get a nanny or assume, a whole other pay for all the things that she was doing when she was at home.
Isn't there a new disability insurance as well for the caregiver?
There is. So they used to not be able to quantify, what a house person's annual income is now. But now, even if someone is fully at home, they feel like there's an economic value to that. And so they will actually offer, they being the insurer, will offer disability on someone that's staying at home. So if they're not able to do their duties at home as a house person, now there would be money coming in the door, again, for the reality of having to pay someone to do those things, like a cleaning lady or a sitter and all those things.
Something to keep the household running.
Absolutely. Yeah.
So I know there are a lot of people getting divorced right now, and a lot of people don't understand that divorce and insurance go hand in hand.
Yes. In a lot of situations, especially if, again, there's young children, there's obviously court-ordered child support, and then in some cases there would be spousal support depending on, again, everybody's salary, right? So a lot of times people will need to go get life insurance to ensure that during those years, call it 10, 20, 25 years, where they're court-ordered to pay those support payments, they've actually insured the value of that. So that if, heaven forbid, the payer passes away prematurely, there's a lump sum payment going to the intended in lieu of those payments now stopping.
So talking about lump sum payments.
Yes.
Annuities. Women are always worried that they're going to run out of money.
Always.
And they're always worried. Yeah. No matter how much money we have, no matter how much debt we may or may not have, we're always worried that, we're going to be on the street.
Yes.
And so what about an annuity as a divorce settlement payment?
Yeah, I mean, an annuity essentially guarantees that income for life, that money for life, right? So that you're never going to run out of it. And you're right, women psychologically would rather never be broke than be rich, where a man would rather be rich than never be broke, right? So there's that psychological component. But yes, if there is a lump sum settlement that's part of the initial settlement, you could annuitize that to guarantee and lock that in. The only thing with an annuity that needs to be taken into consideration is obviously interest rates, because you're locking in at the current interest rate.
Right.
So if the interest rate goes up, you've already locked in at your current one. You can't access the higher interest rate.
So what about somebody that's a small business owner and they've had life insurance for the longevity of their business.
Okay.
And all of a sudden now they've decided to retire and they stop paying the life insurance. What would a better option for them be? Because a lot of people don't understand the insurance product. And I know of many small business owners that, I don't need life insurance anymore, and they just stopped. But that's not the right thing to do.
It's not the right thing to do. And I have a couple that, when you told me that story, it just made me think of them. So they had life insurance paid into it for 20 years, but they didn't really understand the type of insurance that they purchased. And it was the type where the cost kept going up every year. So it wasn't locked in. And because they didn't understand that, they were angry with the product that they purchased. So they weren't really taking their agent's calls. The case got sort of orphaned over to me, and long story short, the husband had a brain aneurysm and passed away, but he had stopped his life insurance premiums a month before.
Oh, wow.
Okay, this was like a feel-good story because Sun Life still did honor the claim, but in most situations, that claim would not have been honored, right? And that person would have paid in for 20 years. So if you're in a situation where you cannot pay your premiums or you need to stop,
or you retire,
yes, you need to call your insurance company, communicate with your agent or directly with the insurer, and find out if there's something called premium offset. Premium offset means that your policy can sort of sustain itself internally. So there's internal equity in that policy that can actually pay your premiums, okay? It's not contractually guaranteed, but some permanent policies do qualify for premium offset. Or you can reduce the amount of insurance that you have so it's paid up, right? So maybe based on what you've paid, the insurance company can figure out a calculation to say, okay, if you're going to stop paying, you're no longer have this much insurance, but we can give you this much as a guaranteed payout, so at least you still keep some type of insurance.
That's good to know.
Yes.
We'll be right back after this break to talk more about insurance here on Finance is Personal. Hi, I'm Liz Naumovski. Welcome back to Finance is Personal. I'm here with Sara Zollo, a financial advisor with Sun Life Financial Canada. All right, so let's keep continuing with insurance. Insurance premiums, are they deductible?
No, generally your insurance premiums are never tax deductible unless you are the owner of a small business and you've implemented a group benefits plan. So if you have 3 or more employees, you can have a group benefits plan for health and dental package for everyone. So it's nice, it's professional, like a big company. And the employer portion of those, which is a minimum 50%, that's tax deductible. Pretty much every other insurance premium is not.
Okay, and benefits?
Like in terms of the benefit that you receive on the payout. Now that's the reverse. So most payments that you receive from the insurance company as your benefit, life insurance, critical illness payout, long-term care, disability, most are not taxable, right? Because the premiums were paid with after-tax dollars, and the benefit is paid out under the Insurance Trust Act, so they're tax-free.
Okay.
Yeah.
And now we were talking about different people that have a contract, different people that don't have a full-time job. What about health benefits?
Health and dental benefits?
Yes.
Yeah, it's very common that people find themselves at some point in their life not having health and dental.
Right.
Whether they're single or they have a family, it's an issue, right? Because it's easier to pay a premium every month than to pay the big expense of a dental bill or an unforeseen prescription cost, right? So a lot of insurance companies do offer individual personal health and dental benefits. One thing to remember there is no pre-existing conditions are covered. So if I have asthma and I go apply for a health and dental package with an insurance company, they're going to say, here's your package, but we're not covering your asthma medication because that was a pre-existing condition. A lot of people don't know that.
They do that with pet insurance too.
Oh, do they? Okay,
Yes.
So no pre-existing conditions.
No pre-existing.
Yeah. However, if you're coming off of a group plan, so let's say you've been let go from a company that had benefits, or you're retiring from a company that had benefits, some insurers will give you a 60-day window to roll over that coverage.
Okay.
Sun Life does that. So basically, within that 60 days, you're able to continue everything that was covered. And that's really crucial because if you or your spouse or your children, like I had a lady the other day, her daughter was diabetic, we were able to roll everything over so all of her daughter's diabetes medication is fully covered.
Oh, that's great.
Yeah.
And so you're talking about medication being fully covered. How do you process a claim? Like, what are the steps to do that?
Yeah, it's really important that if you purchase a product from an advisor, you connect with that advisor, okay? Usually your account or your contracts will be linked to some advisor. Hopefully it's someone you have a good relationship with, but always go to your advisor first so they can quarterback the process. They're not always going to be involved in everything, but I would say go to them first before going directly to that insurance company's head office. That's my first piece of advice. But if you purchase something online, you need to go directly to that insurer. Be prepared for them to ask for a lot of paperwork because they need to justify that it's a bona fide claim, and don't take it personally because they're just making sure that the claims they pay out are real, because if they pay out every claim that came in, there would be no money left to pay out the real ones.
See, I always like to speak to an advisor.
Right.
Just because I feel more comfortable, I like to ask a lot of questions.
Right, yeah.
And I want to ask the questions and I want to get the proper answers for it, because I'm not going to go and buy, whether it's insurance or whatever it is.
Yes.
Just assuming.
Are you a baby boomer?
Yes.
Yes. So that's a very typical of baby boomers. And it's funny because they thought that millennials would prefer like robo-advisors or online, but millennials are now saying they actually prefer to talk to someone too.
Yeah,
so that's really interesting.
I just think for me, I think it's one of the smartest things, because I know growing up, I was told not to ask questions, right? They're a professional, don't ask questions. They know what they're doing.
Yeah.
But I like to ask. I ask a lot of questions, and I like to see tangible stuff, right? So I want it on paper, I want to read it, and I want to know what's going on.
No, that's very normal, and I think most women too. I think it could almost be a female thing that we're visual and we're auditory, and that's also how we build trust, right? They say that you learn a lot by just meeting someone and that eye contact, right? So I would encourage, like especially women, if you're not involved in your financial decisions, that you should go get involved. If
Absolutely.
up until now, your husband or your partner has been sort of having individual conversations with an advisor, either go get your own advisor, because you don't have to do everything together,
right.
or start going to those meetings.
And so we're talking about women. So
Yeah.
what about the insurability factor of women?
This is interesting. So women in general, we know that they live longer. This is not a shocker.
Right.
Everyone has their
Right.
theories as to why, right? I personally think it's because they go to the doctor more frequently, whereas you ask a male, like, when was the last time you've been to the doctor? He does not remember, right? Unless there's a woman nudging him to go annually, the answer is like, I don't know.
Yeah.
I don't know if I have a doctor, all that. So I think it's because we go to the doctor more often, but that makes actually a problem for insurance because your medical file is thicker, right? So there's more test results and things to go through. So for women, I would say definitely you want to get insurance going earlier than life than a man, arguably, and it's called activating your insurability.
Right.
So what that means is even if you're young and healthy and you have a couple $100 that you can set aside every month in your budget, or $100 a month or $50 a month, whatever it is, go talk to a planner that you feel you can develop a rapport with, that you trust. Ask them where insurance fits into your overall financial plan. And this is the best analogy I've ever heard of, okay? Insurance is your defense. Investment planning is your offense. You need both to win the game.
Absolutely.
Right? So I truly believe there's a spot for insurance in everyone's financial plan, and most people are very, very underinsured.
Well, that was one of the questions that I asked in the intro, right? And the other thing I want to ask you, we've got about a minute left. You said that women are less likely to cancel if they have insurance.
It's true, yes. I find that when women buy insurance, there's an emotional trigger. There's an emotional decision. They're usually thinking about a situation where insurance could have benefited a loved one in the past, or they think about the beneficiaries that they're leaving this insurance for, and that emotional trigger stays with them, and they don't ever think about canceling that insurance product. Or with men, I feel like it's more analytical and less intuitive or emotionally based, the purchasing decision. So I see with my clients that the female owners of the insurance tend to like really lock and hold that coverage because they value it.
Well, we value a lot of things as women.
Yeah, we do, yeah.
The most familiar type of insurance is life insurance, and the bottom line is that not everyone needs life insurance. Make sure you purchase the insurance that best suits your life situation. And once you've purchased your insurance, review it carefully and update it regularly. Make sure that your family and business information is current so that you are adequately covered. And we're always faced with changes in our lives, and of course, accidents happen. You want to make sure that you aren't left inadequately covered, or worse, think that you're covered and you're not. I'd like to thank Sara Zollo for joining me, and you, our viewers, for watching. I'm Liz Naumovski. Bye for now.